All right, there we go. All right. Hey, this is Ed Parcaut, host of Inner Edison and all my other podcasts. But today we're doing Real Estate Jerky. And we had Todd Su and Cindy Su on the other day and had a little difficulty on, I'll say it's my side. I don't know where it came from, but we had some issues with the Wi-Fi. And so we decided to do a part 2 about all the stuff that we were going to go over for manufactured homes. First thing I want to get into, I'll throw some definitions out there just so people understand what we're talking about. And then I want to get into what you actually do, because that's the most important part. We okay with that? We good? Mm-hmm. Say hello. Say hello.
Hello, everyone. Thanks for having us on it.
Thank you.
I appreciate you guys coming back on again. All right. So people are always asking what a manufactured home are, right? And basically manufactured homes, they're built a certain way and they come out on an actual permanent chassis. And that was because HUD came up with new standards for manufactured homes. And that started back, and they all have a label on the outside that most people peel off and forget about, or they have the little piece of paper inside in the cabinet people get rid of. But the main change where they went from a mobile home, that's what most people classify, and we said for years, to a manufactured home was in June 15th of 1976. And why that's a big deal for me is when they're on a permanent foundation, they have to be newer than that for me to be able to do a conventional loan, FHA, VA, or any, if that's the loans you guys do too. When I mean us, I just mean the industry, right? When it goes from personal to real property. HUD is the one that came up with it because they wanted different standards. All right. So the difference between a manufactured home and a modular home is they're constructed to the same local state as what a stick-built house is done, right? And those can be a modular. Most people know of them like log homes, other types of panel homes. But we're seeing a lot more of these coming forward because of how hard it is to build houses right now and how we can do them much faster in a factory. So I want to get into the manufactured part that you guys work on, which is you do a lot of parks, you do replacements, you do the normal manufacture that you go and buy, put it in a lot. You might not own the land, right? That's what you guys normally do, right?
Yeah. That's our main business. Is we do quite a bit of in-park business where people already have an older unit, maybe in 1960s or 70s, considered a mobile home, as you were talking about. And now they want to upgrade. They love their community and they want to stay there, and they want to upgrade to a brand new manufactured home. Sheetrock, tape and texture, looks exactly like a regular house, with all the amenities in it, and be able to have a home that is energy efficient. But I know you're going over through a bunch of definitions and talking about modular and manufactured homes. And we get a lot of questions about that, actually, on the differences. And I think for a consumer, I think the biggest difference on a manufactured versus a modular home is more of financing. And Cindy's going to get a little more into financing for you because she heads up our loan department. And so just to kind of understand, mostly in communities and manufactured home communities, they actually don't need to upgrade to a modular home because the financing is all the same in parks because it's not permanent foundation. But on private land, a lot of our private land clients, they want to have that financing just like stick built and be able to offer FHA. So they do the modular style, which is usually a little bit more expensive. You probably wouldn't be able to aesthetically tell the difference between the two, but internally there's a higher level insulation. There's a higher level of 2x4s versus 2x6s. So that's the main difference between modular and the manufactured homes. So just to kind of clarify that a little bit.
Right. And I didn't realize when I was researching for this that HUD made it, they had to come out on a permanent, to travel with, right? Whatever they called that. They have to be on a permanent chassis. That's the word I was looking for, which that right there, where modular comes out in pieces, right? Not on a permanent chassis. But I have a lot of people who ask me all the time about manufactured homes, how to get financing to buy one in a park, how to upgrade the one in the park. So why don't you guys go through that? Because you're going to be talking to a lot of the clients that I deal with up in Tuolumne County and other counties where they have a mobile home and they want to upgrade to a manufactured home. right? Or they have an 80s manufactured home and they want to upgrade to a newer, brand new one that looks totally different, totally insulated, totally changed. So why don't you guys go through that process? If I wanted to upgrade, how do I do that? Or how do I finance one?
Yeah, I think Cindy can answer that since she does a little more on the financing side. But just to kind of start the ball rolling, I think the main question a lot of people want to know is, if you own a mobile home already, do you have to come up with additional down payment? I think is the big question that people have. So Cindy, you can go ahead and run with it.
Hi, everyone. Thank you for having us here today. The type of financing, it depends on whether the current home is on permanent foundation or not. So we have two types of financing. If the homeowners already own the land and the home is already a permanent foundation home, we can get traditional lending with zero down, using the current land value as their down payment. Mm-hmm. If the home is right now being set up above the ground, just like a mobile homes in modular homes, manufactured home in the mobile home park. Mm-hmm. In that case, they only, there are special financing we have to go through. Depending on their credit history, if they have really good credit history, we can use the value of the old home, a portion of that as down payment. Usually they allow up to 20% valued of the old home as down payment. So to make the long story short, you can use a portion of that as down payment. Now, let's say if the client doesn't have good credits, can they still use that option? It really depends on the value at that time. Sometimes the case doesn't work for them, then the minimum down payment they'll need is 10% down. That's a minimum.
All right, so let's just talk about non-permanent foundation right there. Let's just stay right there, okay? Mm-hmm. So if I am going to buy a house, manufactured home, whatever it is, in a park, mm-hmm. financing, if I go to buy that, how much? And say I have decent credit. Is it 10% down on that type of financing? Because what most people don't realize is the fact that it is not real property. It is personal property. It's like, and I tell people, it's like a car. Basically, you're financing a car, but it's really hard to repo that car, right? Yeah. Right. So it's a little bit more high. I assume that the rates on these things are a lot higher than what conforming rates are, right?
Yes, it is higher, but not so much compared to maybe 5 years ago. So let's get to the down payment. We have a 5% down payment, but those are reserved for excellent credit, excellent income. When I mean excellent, is that the lender's looking for 720 FICO score, 5-year credit history. They have bought and sold home before, or own a car or pay off the car payment before. There's absolutely no late payments, no bankruptcy, or any type of history in the last 5 years to 7 years. So those are considered excellent credit for 5% down. A typical group of clients I see is that 10% down is the minimum. They still have to have good credits, but minimum is 10%. If the client doesn't have decent credit, we can do 20% down to up to 30% down. It's case by case. So, and I personally review case by case with the client if the typical deal doesn't fit our norm. Mm-hmm.
But to answer Ed's question, though, the interest rate is anywhere between 1% to 2% higher. But because you're borrowing a lot less than a conventional single family home, you're talking about the payment difference of $30 to $100 difference per month. So although the interest rate is a little bit higher, it doesn't affect the payment that much because the loan amount, you're talking about borrowing anywhere between $100,000 to $200,000 versus on a conventional, you're borrowing $700,000 or $800,000 where 1 or 2 percentage points is going to make a world of difference. But in this case, usually on chattel loans that we do in parks, doesn't make that big a difference at all.
Right. Well, and also that interest rates are based off of risk. That's a risky loan because, again, when I said it's really hard to come in there and back up a trailer and take it out of there if the people aren't paying on it. It's much higher risk. So you're going to have a higher interest rate, and everything's based off of risk. Higher the risk, the higher the interest rate. I mean, car loans are decent pricing unless you got a really bad FICO score, and then you have the same issue, right? So this is what we're talking about. These are not real property, and people don't understand the difference between personal and real property and how it changes. And I try to explain to them all the time. A lot of people are selling manufactured homes on land that are not on a permanent foundation. But if they spent $5,000 and put a permanent foundation underneath them, now they have real property and they can sell it for way more than they could originally. And it only cost them $5,000, but they probably gained another $50,000 in value by doing that.
And easy for their future customer to get financing also, because the home being on permanent foundation, it's easier to get financing.
Yeah, resale value and ease of sale, and definitely all those points. Talking about interest rates, I think one thing that is kind of surprising that a lot of maybe your listeners don't know is, and why people are able to build equity in living in mobile home parks, is that the interest rate, you're actually able to get a tax write-off on the mortgage, just like a regular house. So people are able to get that tax savings and somehow be able to build some type of future equity or tax write-off. And it's a good stepping stone for them to potentially buy a single family home. I can tell you countless stories in 26 years that we've been doing this, that we've had clients 3 to 5 years end up with between 100 to 300,000 more than they would have had if they had been a renter. And then they end up buying a single family home. Especially in the Bay Area, you need at least 20% down to have any type of hope of being able to afford a payment without eating top ramen every day to be able to, to pay your mortgage payment.
Right. And it's, because owning anything, you're going to it will appreciate to a certain point, right? The only thing I have to clarify right now is with our current tax situation, with what they changed when the last administration changed, most people don't write off the interest. Most people write off the standard deduction. Not everybody writes off the interest. But you need to, I'm just throwing a little disclaimer in there to talk to your CPA and find out if you can write off that interest or not. We're not saying that we're just saying that it's a potential you can do. Right.
Correct. And then also has effect on what the balance is as well. So yeah, definitely put that little disclaimer so I don't end up in trouble here. Thanks, Ed.
Well, I just, people, they want to make sure people understand that, for years it was that's how you got your tax deduction. And that's why most people bought. And then I changed it to the reason you're buying is to build personal wealth, not to write off interest right now. And, we don't know going forward if they make any tax change, then we'll have to start writing off again. And then you'll definitely want to make sure you have a house. But currently right now, just talk to your tax advisor. And there's other things that you need to look at, because real estate agents, when you do real estate and you own other properties, you can write off interest that other people can a certain way. So talk to your tax advisor about that too. So there's so much in this that we could get in for hours. But the most important thing is people want to know because prices are getting very expensive, especially over where you guys are. If I want to get a house at, I can buy a house at $800,000, or I can buy a manufactured home in a park for $300,000 to $400,000, right?
Correct.
Right. So there's a totally different to be able to live where you want to live. Up in, I do a lot up in Tuolumne County, on permanent foundation, but there's a lot of parks that they're selling them for 150, 200,000, which sounds like a lot for up there. So they need financing. So Cindy, make sure you put your tell people how to get a hold of you.
Great. So we have a website. It's called homeownershipfinancial.com. If you can check it out, we have all the information on there. I also want to mention that we can finance older homes, older than 1976. So if they have decent credit, then we can finance up to 1968.
Wow.
Okay. Yes, we are one of the very few that can do older home financing, whether single wide or double wide.
Yeah. And I think a lot of people don't know is in residential financing, there's a good amount of lenders that are out there, but for the manufactured mobile home side, there's only a handful. So
there's hardly anything.
Yeah, you can't just go out to Bank of America or Wells Fargo or one of these banks and go, hey, I want a manufactured home. They say you will actually be able to do it, but that's on non-chattel loans. In parks, they do not do it. So make sure some of your listeners, make sure they don't come in and try to get a personal property chattel loan in one of these regular lenders and expect that, because they'll really ask you, is it permanent foundation, or they ask you and you end up going through the process. I want to save your listeners a little bit of time by not doing it that way.
Right. And for what most people don't realize, right, what a chattel loan is, right, or what chattel means, right? Mm-hmm. So
in addition, I'd like to also bring it up. We also help veterans loans. Yeah. We also help veterans. Traditional veteran manufactured home loans require 20% down. We also program for 10% down for veterans. So if
and you're talking about for manufactured homes in a park, on lease. Yeah. Okay. I just want to clarify it, because people are going to come and say, "What? I heard I have to do 20% down on a permanent foundation VA." No, you don't. Right. So
we don't have VA for manufactured in park. We have CalVed for manufactured home in park, but that's the government program. Our regular manufactured home program only require 10% for everybody. So sometimes.
And that was is that one on permanent foundation?
No, it's in the park. It's above the ground. Yeah.
Okay.
Personal loan.
Yeah.
Right.
You were talking a little bit about some of the consumers and who are buying. What's pretty interesting that we've seen in the recent market trend, especially in Silicon Valley and in Southern California and LA. We have offices all over California. So, but our biggest markets are Los Angeles County and Santa Clara County. What we've noticed is a lot of the high tech, folks, they are not buying the single family homes anymore. They're not buying the traditional single family homes, because they end up moving job to job after a couple of years. They end up staying at that high tech job until they goes public, and then they move on. So we've actually had a lot of our clients, come from Apple, come from some of the big high tech companies. They buy these manufactured homes. Normally it would be $350,000. They'd actually put in $150,000 to basically how should I say, trick my ride, or basically, upgrade it and put all the amenities in it. And these things look like regular houses. So it's amazing to kind of see some of these Google guys just come out and decide to spend a boatload of money, even though maybe it's not the best financial decision, but because it's not going to be a permanent living situation, they just want to live a little extravagant and not pay, in Sunnyvale, that's really close by to San Jose, you're paying $1.5 million for a townhouse. So $400,000 seems like a good deal for a manufactured home in a park now, right? So
right. No, I had a client who bought up, and I helped him buy a cabin, and he's living in a park, and the house is worth $450,000. He was going to sell it, but then he realized he was going to sell it and then buy a house there, and he realized how much more expensive that was going to be in payment wise. So he decided to get a second home somewhere else. So I was helping him with that second home. So, but I was surprised how expensive they are. Yeah. I mean, compared to where I am.
No, definitely. It's a different, I guess we're living in a kind of a weird bubble here in between Silicon Valley and LA County. It's a little more of a bubble, and you just have people that are living on a lower income between $70,000 to $100,000, and they just don't have a place to live. Just to be honest, those people probably will never be able to afford a single family home, and this is their first starter home. And honestly, that's why we're so passionate about it. People always ask us all the time. We do some single family business, and some good friends, we've sold their $2 and $3 million homes, and they go, well, Todd and Cindy, you guys are so good at regular residential. Why don't you just do that full time? And I think the answer is just that's not as much our passion. We love to do it. We love the commissions, obviously, but because coming from our first generation, Vietnamese, Chinese families. Where you grew up on welfare, and school lunch was actually a luxury. We have a passion for getting these first time buyers into their first home and that couldn't normally afford it, and those who are let's say working in assembly, technicians, or working retail. they're never going to be able to afford it. So they need a place they can call their own and have their own parking without worrying about their windows getting, smashed in because they're parking on the street. You actually have your own parking. You don't have the shared walls, so you don't hear the music of your neighbor and having to, grab your broom and and tap on it on the side there to try to have your own spot. So, some of these people, they live in these homes for life.
Right. I mean, it's a great, like you said, great starter home or a great final home. Mm-hmm. Right. I mean, because that's some people, they in between those years, they're like, okay, I want this. And then now they're like, I'm done. I want something different. And so there's many different reasons to do this. But I totally see where you're talking about, where you want to live over in a certain area, can't afford the houses. Excuse me a second. I tell you these days. So you can't afford the house, so you can do this instead. And that's so much better. I mean, you actually own something and it will appreciate, right?
Correct. Exactly.
Any unique situations? Anything else you want to add? You guys come, because I don't do these. I mean, I only do them on permit, and it's probably 35% of what I do, throughout so I don't do a ton of them, but I don't do them in parks. I don't do any of that kind of stuff. So anything that you want to help, because I constantly get calls for people to say, I need a loan on a manufactured home in a park, and nobody knows where to go.
So we also handled refinancing as well. So if the client currently have a current manufactured home, I'm more than happy to look into the situation and see if they can save any money if they're going to refi before they even started anything.
Cindy, what's your phone number?
408-292-5000. Do you want my cell phone, or that's the office phone?
I'm just putting that banner. I'm sure your husband prefers them to have your work number.
And the loan we have here, we don't have any prepayment penalties. And I'm not speaking for other manufactured home dealers. Okay, well, we don't have prepayment penalties, so the client can pay off anytime, pay more anytime.
Right.
Yeah, I think one other thing that's not really known is a lot of times people don't understand how the business works. So I think a lot of consumers are like, well, how do I buy a brand new home? And I don't see a brand new home in a park. How do I get one? So we have a display lot in some occasions, or we have brand new set. But basically, consumer can come in and say, hey, I love to live in, I want to live in San Jose and South San Jose. I want a brand new home. I don't see any new homes. What we do is we'll actually go out and find a spot for you to put a brand new home, and you can fully customize that home. So you can look at one of the homes out here and basically say, hey, I want number 2, which is 1,500 square feet, 3-bedroom, 2-bath with a walk-in closet. And I want that in South San Jose. So you put it on the deposit, and we can actually go find that spot for you and put the new home in and find it for you. Or, if you want to go a little more affordable, we can find a home that's already, that wants to be put on the market. Somebody is selling it and they've lived there for 10 or 15 years, and we can find that home for you and look at it. So I think just understanding, how the business works, and that it doesn't have to be for sale at this moment in order for them to find that home that they want to build or design for future. Or those who want private land, we can help you find your private land and also find a brand new home to put on there. And then we can handle all the permits and all the plumbing. In some cases, we end up doing septic. Some cases we want to, attach it to the city sewer and all that good stuff. So we'll handle from A to Z if needed on all of those aspects if that's what you're looking for. So we'll try to find you the land and find you the right home that'll fit on there and do all the permitting process. Although the easier process obviously is to have the land or buy in a park. So those are some of the other potential options there are out there. And I think just the manufactured home industry as a whole, I think is starting to finally get some attention. They're not calling them trailers or mobile homes much anymore. I think with the trend of how things are built, I think people don't understand that with being in a controlled environment, it's actually a better way to build a house because you're not exposed to the elements. A lot of times it's going to rain and then the wood gets rotted. Maybe a lot of, snow or whatever the case may be. But these manufactured homes are built under controlled conditions where it's under a roof. And not just that, but if you look at McDonald's, you look at Burger King, if you look, a lot of the building structures are now, and as well as hotels, and we've been involved in building modular hotels as well, that they're giving subsidies if you do build modular style or manufactured home style, because they're building these structures not for 50 years or 100 years like in the past. They're tearing down these structures within 20 to 30 years. So now it's more about efficiency. I think building things efficiently, quicker. And in the case of like McDonald's or Burger King, they want the structure to be, square and simple, quick to build, and then, styles change. So now they can tear it down and be able to build a new one. And with the hotels, it just makes sense. A lot of like the Transcontinental and some of these larger hotels, they can build these manufactured home hotels or modular hotels a year and a half quicker. And in these big markets, a year and a half of additional income for these Marriotts and these Hiltons. That's a lot of money in their pocket, and they're building it a lot faster, and now they can replace it a lot easier too as well. So I think those are things that people just haven't been thinking about. And now with our just the thought process of things getting built quicker and faster, modulars are something that are just building in quicker fashion. So and ADUs as well. I don't know if you want to touch on ADUs.
Yeah. Well, first, what's the phone number to reach you? Same number, or you want a different number?
For Advantage Homes.
For the real estate part. Yeah.
Yeah. Advantage Homes. The number is 408-363-9300 is our main number in San Jose. And magically, it's probably going to appear right down there because Ed is awesome. Wow. See, magic.
Well, I get a lot of people go, you look like you're distracted. It's like, you don't understand. I'm grabbing stuff. I'm looking to see if there's comments over here on Facebook, because a lot of people don't click the button that says give access to StreamYard to make comments. I'm looking all over to make sure we can get the comments, because I hate having to answer them at the end. But let's go back to the ADU, right? Which is, it was a huge thing that was put out because it's really difficult to build right now, that most counties and cities are able to add additional dwelling unit in your backyard for people to live in. I'm not saying to Airbnb it, but you know what I mean? It's like a mother-in-law's quarter or whatever for family or whatever. And it's really difficult, but you're saying you're using a lot of the manufactured homes for that, right? Or is it modular homes for that?
We're doing manufactured, we're doing modular, we're doing both. But super popular is going to be the modular style, because now you can include it as square footage to the home. So if you go manufactured, you can still use it as for the same purpose. It's just you're not going to be able to include the square footage when you decide to sell the home. So obviously there's more value, more cost, but then obviously there's more value upon resale. So those who are going to keep that house for life, then you can go manufactured home, save a couple bucks, but if you're going to potentially resell in 5, 10, 15 years and you're concerned about resale value and be able to add that square footage to your home, then definitely do it modular style. But it's a huge market, the ADU market right now. Everybody's brother, sister, cousin wants to build an ADU in their backyard. And I think a couple of the misnomers are, number one is that the manufactured home or the modular home can be put back there, and it can be built within as quick as 6 to 8 weeks at the factory, versus you have someone in your backyard doing it stick built style for a year and a half, having a contractor in your backyard. So just that alone, I think there's some value in not having someone there, because the home's already pre-built. It's just a matter of the foundation and the permitting process that takes the time. Versus on a stick built, you're actually building it from top to bottom from scratch, and you're waiting that extra, year, 8 months time because of that. Now, a lot of the counties we've worked with, they're trying to fast track these ADUs. And like you said, they're as large as 1,200 square feet in a lot of counties. They're allowing large homes because there's just not a lot of land out there in a lot of these high impact areas. So they're constantly trying to figure out how to get affordable housing out there. Or something that's going to, manipulate the land that people already have and be able to utilize it. But like you said, I have some clients that actually utilize the ADU. They build the ADU. They move to the ADU.
Right.
They rent the house up front, which is really funny. So
Right. But I want to go back to the ADU. So for me, I would tell everybody to go modular. All right. Because if you ever done a financing on a single family home, and then all of a sudden there's a mobile home in the backyard, and if it's on permanent foundation, you take out 90% of the people who would be able to lend on that. Right. And that's what a lot of people. So I tell people, whatever you do to your house, plan on selling your house. Right. Don't say you're going to live there forever, because no one ever lives forever. Right. Forever is a very long time, and things happen in life. Life happens while you're planning it. Right. So what I recommend is, if you're going to do a modular, it's the same as a stick built. And when you're talking about that process, and you're right, because you have somebody in your backyard for 6 months to a year and a half when they're stick building it, because you got to sign off on permits, you got to have some inspections, you got to have all this other stuff. Where with the modular, it just comes, put it up, you're done, and there's not all that additional time periods. Right.
Yeah, definitely. Don't want someone tracking in the mud and coming in using your bathroom all the time. It's a pain, and after a while, your wife or your husband's going to start nagging you, one or the other. So
buy the modular, get it built, have it brought out, put it up. That's the best way to do it. That's what I think.
Yeah, so easy button, definitely.
Yeah, but I've been because we talked about this before, and people who do the manufacturer, you're just waiting for a problem down the road, because then you have to use it as, say, it's just storage, right? Because I run into it all the time up in Tuolumne County. There'll be a single family home. They had family who came, so they put a mobile home there for them. And I mean, a mobile home was moved, right? And so now you're like, okay, well, we can't get a loan. It's just storage, right? So
yeah, exactly. It's not worth trying to save that extra couple bucks. Go modular. It's the safest and the most cost effective for future resale, definitely.
And I think so too. All right. Well, been about 30 minutes. I like to keep them right around there. Anything else you want to add? I'll throw your phone numbers back up there again for people in case they, forgot them. That's Todd for the real estate. And then here's Sydney for the financing of manufactured homes, or even older mobile homes.
And if you want to find us to just kind of see what a manufactured home looks like, or a modular home looks like, you can go on to advantagehomes.com we have virtual tours, 3D Matterport tours. And for
you say Advantage or Advantage?
Advantagehomes.com.
So plural homes, not just one home?
Yeah. Homes. Yep. Advantage Homes. Multiple thousands, hopefully. And
did I spell that right?
Yeah, just
no, I missed a D.
Yeah, just a D. And for Cindy, if you guys need financing, you can actually apply online. You can go to homeownershipfinancial.com. So that might be too much for Ed.
No, it's scrolling and scrolling. It won't let me put that on there. Sorry.
All right. Hey, I wanted to thank you for having us on, Ed, and always good to see you. And hopefully you and the family are doing well. And
there's a website. Worst case, go there. Or otherwise, call Cindy and she can help you out.
Exactly. Just not her cell phone, though. Hey,
I got the office number. Don't you worry about it.
Thanks, Ed. Appreciate it.
Because you don't need those extra calls from people going through the internet trying to get a hold of people. But hey, thank you so much for being on today. I appreciate it. Yes. Yeah, sorry we've had these issues, but we finally got through it. And again, it was really nice seeing you guys again today.
Hey,
thank you for the opportunity.
All right. Look forward to seeing you soon.
Bye-bye.